All right. Is this over? What is up, everybody? Kind of an improv stream, not gonna lie. But I saw that. Like, yeah, well, Silver, is hitting all-time high again. May as well start talking about stuff. So we're just gonna kind of chill, hang out, not anything serious at all. So I'm gonna kind of talk about stuff. We're gonna play some nice background. Possible. It's about, what, 20 minutes away before it all starts. I don't expect much happening today, honestly. This is kind of just, like I said, it's just kind of a improv stream. Wasn't really planning on doing. Also, what's up, Chasing Sleep? How are you doing? Continue to stack gold and silver. That is right. Stack, regardless of what's happening today with the... This is just fun stuff to go about over. I'm gonna say RJ, because that's, I don't even know how to... RJ, what's the world from Powell? Yeah, he hasn't spoke yet. We got about 20 minutes away from that, from the decisions. Haven't seen much, but I think the scheduled press conference is at 1:30. We got about another hour before he talks, but the decision will come, of course, beforehand. We're gonna track that as like maybe 5 minutes before it's supposed to be announced. We'll switch over to page that I watch that tracks all that stuff. And so Ben stacking, what's going on, man? How you doing? Keep stacking. That's right. Keep stacking. Keep stacking. Speaking of keep stacking, I got some new emojis, guys. Stacking. It's kind of hard to see it, but I put some emojis in. I was kind of working on stuff over the past few days, so don't know if it's gonna stay or not, but it's just something for just additional things for the channel. Eric, what's up, man? He says, very curious to see if a rate cut will affect spot silver, as it seems likely that it's already been priced in. Yeah, I was thinking about that too. I wonder if that all-time high push was because of like the prices already being set in place for the anticipated rate cuts, because I think the rate cuts were let me see on the page here, because it says the rate cuts, they were expecting a 60% chance of a rate cut about a month ago. So I'm pretty sure that those prices have been set in place for the most part, but I mean, you never know. Never really know stuff. Cool emoji, thank you. Yeah, I've been putting I have a couple in there, so figured you guys will have some fun with that. Stacking since 2017, 50 to 1, and I can't believe we are here right now, right? It's crazy. I mean, we might very well. What's the GSR right now? 69. I mean, I'm willing to bet that in 2026 I'm gonna trade in like 50 of these guys, maybe not these equals specifically, but 50 of my generic stuff, or maybe a full ounce of this guy instead. You never know, right? But it's gonna be kind of the that's my guess. I'm willing to bet in 2026. I don't know how soon. Maybe by the summertime, DSR will drop low enough to 50, and I'll make my first trade. Started stacking in 2013. My first purchase ever was at JM Bullion. Ben, you and I are on the same boat. My very first purchase was from JM Bullion. It was actually not this one, but it looks very similar to it. This guy right here. So I bought 2 of these, and I think I bought like a tube of Eagles. Guys, I bought like a tube of these. I think I bought like, I probably dropped, I don't know how. I probably spent like 2 or 3 grand in the first, like, first purchases. Yeah, around 70, yeah. 70 right now. It's Showing 69.32 on SD bullion page, but we'll see what happens as we get closer to the Fed rate. I'm willing to bet you probably don't see much happen with silver price. I'm pretty sure that jump that we saw in the last week, the $3 movement, was probably because of the rate cuts. I think that whole entire run up was anticipating this moment. It was more like 50-50 and we didn't know what we were going to get, then maybe we wouldn't see the prices be baked in. But I think because this past week's run up is just setting the price for what going to happen today. That's just my opinion. Yeah, Ben, it was awesome. I mean, that was a good purchase, not gonna lie, getting this. I got 2 of these, and then I got a tube of Eagles. And I think like the next week I bought a 1-ounce gold eagle, and then I bought like a bunch of other stuff too. Fortunately, I sold it all like a dummy, so I have them anymore. Here we are, starting over again. 50 to 1 would be insane. I'd take 50 ounces of what I have and swap for an ounce of gold. I would still be left with plenty. And that's the crazy thing. Like, if it ever gets to that level, just to give you guys a perspective, if it hits the 50 level, I can take these 3 right here, and essentially, it's not a full tube, but, you know, add 3 more ounces into here, and you'll get a full tube. This right here will buy me these 3 bars and 1 tube will buy me a full ounce of gold, even a 10th ounce. But I just like the visual, and like just crazy to think. It's gonna be crazy to think I can take all this. Like, hey, I want gold. But it's gonna be interesting for sure to see how that all. But one day, I really do think it'll happen. I think the GSR will go down low in this year. But I could be wrong. I don't really know. I'm hoping by, if everything stays the way it's been going, I'm gonna buy I'm hoping I can get a 1/4 ounce. Get a 1/4 ounce. Get a 1/4 ounce of this guy instead of a 10th. So that's the goal for maybe the end of the month going into January. We should be able to get a 1/4. Right, depending on all what the prices do, of course, and stuff. Tom, what's up, man? My first buys were from ATMEX in 2018. I bought 29 ounces for 17.76. Nice. Then I stopped. You haven't stopped? I mean, if you have stopped, or it was just a one-time deal? Have you seen the reel on YouTube where the guy shows the compares to different euros over time? It depends on who it is. I have not. I mean, I probably have, but I can't really think of off the top of my head who that might be. I'm psyched I still have my first purchase. Yeah, David, that's in a way, because like, I don't know, it's unlikely, so it's like, it's almost stupid to think like this, but because I sold all my stuff a couple years ago to my local coin shop where I got, you know, this 10th ounce here, and a lot of my other silver and stuff that I picked up over the past year or two. But part of me wants to just go back and just buy the same year and the same stuff that I had before, just to say I got it back. But I know that's not, I know that things that I've sold have definitely made it around. It's probably in like Nebraska now for all I know. So it's just like, part of me wants to just really like rebuy it and like just, you know, falsely tell myself and lie that I got it back. But it goes from like 14 to 1 to 20 to 1 to 40 to 120 to 70. Yeah, I mean, I know the history behind it. I think didn't it get as low as like in ancient Egypt? I think they said it got low to like single digits. It was like 3 to 1 or some crazy like that. Silver cannot be stopped. Well, you never know. I mean, I think this is the longest it's gone without pulling back since the previous, like, because 2011's high only lasted like a day or two. Then it crashed and then kind of had a little bit of a run up, but we've been exceeding it. I mean, it's been going just parabolic almost. I mean, if you think about it, just in like August, we weren't even in the 40s August, and now it's December and we're already at 60. Like, it's been insane what silver has done. Since I stopped back then, I started recently and now have over 300 ounces. Not a whole lot. Hey, you got more than I do. But I'm gonna ramp it up a lot now. I think finally come to peace on how I want to build my stack out and everything and all that good stuff. So I think I'm gonna go a little more crazy things. What's up, baby shark? How are you doing? Welcome in, everybody. 7 to 1 in ancient times, that was the rate when they mined. They loved copper back then. I mean, I don't think copper's gonna do anything today. I talked about that on the last video, but I just don't see that replacing anything. Still buying silver. I only picked up 4.5 ounces this month, but it's 4.5 more than what I had. Yeah, I mean, and that's the problem. Like, you know, a lot of the times we'll want to look at things as like, oh, this was $40 an ounce, and now it's 60. But it's like, you got to remember, like, we gotta count how much we have in ounces, not how much it's worth. Like, the ounces it's what's important. How many ounces do you have? And it's such a hard thing to like trick your brain to think like that, but found, but yeah, that's true. Yeah, I remember hearing silver is like a byproduct of other mining. February buying silver for 32. I mean, I remember, it doesn't seem like it's that long ago, but I was buying silver when it was like high 20s. That was recent, wasn't it? That was like, when did we hit? Because we hit 29 for just a brief moment in April. And I bought a lot of silver when the GSR was like 100 something. I bought it when it was like right at 29, maybe 30 for the spot price. Like, I bought it right when the GSR was at 100. 104 or some crazy thing like that earlier this year, and so now it's just gone up. So I kind of bought in the 20s again. I can say that this year I bought in the 20s. But yeah, it's insane. I mean, that's it's like a 3x on my metals just in that one purchase. Maybe not 3, but what's up, RJ? How you doing? Howdy. Welcome in. I'm supposed to meet up at 80 ounces today. Let's go. I feel like you should. I mean, I don't want to say if I like. You know, I was thinking about this, like, because I remember being really fascinated by the 100-ounce bars for a moment, and I was thinking, it's like, if I'm gonna buy a 100-ounce bar and the GSR's at 100, it wouldn't make any sense to buy like silver when you can just buy gold instead. If you're gonna throw all that money into silver, you may as well buy gold. And then now that the GSR is like in the 60s, or going into the 60s, I'm just like, man, like, it's crazy to think, like, when I see like a 100-ounce bar now, it's like, there's no way I would pay a 100-ounce bar when you can get gold for much less. Like, I don't know, that's just my opinion on that. Paid the highest premium ever, $154 an ounce. Hey, well, now you know what? Now these $100 privies don't look so bad now, do they? The way that silver is going, it's crazy to think the way that silver is going, I'm gonna make money on this if it continues. Like, what the heck? I've been buying more gold. I get the 1/10 eagle and the 5-gram bar this month. 4.5 ounce silver, nice. I got silver at 16 to 17 earlier this year when it was still 20 to 30. Let's go. $1 Samoa, 2 ounce Washington. Said at the same time. Please like the stream. Yes, guys, please like the stream. many likes we got? We got 12 likes. Also, for you guys in here, I got new emojis. I think I talked about it in the beginning, but now that everyone's kind of trickling it on in here, some little fun, lighthearted things for the stream. Saying we got 7 of them in there now. We got the one where you can wave at people. We got the silver roulette icon. We got the hype. I think I need to fix it because I don't think they're scaled properly, but I at least have the image. There's some cool stuff. The loyalty stuff is still going on. I'm trying to make the stream more fun. So there's more things for you guys to like interact with. I think there's like heists and stuff. Things that I think I activated all that stuff. I'm not sure. Not sure. I forget what it is. But let's actually do this. Let's set up a poll real quick. All right, let's get a fun little poll here. What do you think the interest rates will be cut by today? None, quarter, half, or 3/4 or more. Everyone is saying that everyone's saying the quarter point, but we'll see what happens. Never really know. Picked over 300 paper contracts for everyone else to silver. Yeah, I don't think that's changed. I think that's just going to get worse and worse as things happen. Game over fiat, yeah. How many channel members do I have? I don't... That's a good question. How many do I have? It's not a lot. Five. Just got the American Silver Eagle today and one cool collectible. Let's go, B. Happy. Everyone's saying 1/4%. Could you imagine if they do? Well, I mean, I think this is what? This is Powell's last one? Because aren't they gonna... Isn't Trump gonna put some new guy in there that's just gonna absolutely just, like, cut the hell out of the rates even more? Like, what are the... let's switch over, actually, to website 1. Take a gander at what we're... So this is what I'm looking at here. Let me zoom this in, guys, so you guys can see what I'm... So, hope that's not... Should be, guys. But yeah, right now we got 5 minutes away before we find out what it is. What is the... See what they're expecting going to the next ones, like... Because I think Powell's done after this one, right? Like, Trump's gonna get a new person, a new Fed chairman, so... from what I don't know, I don't see anything, like, drastic, but I know, like, the guy just wants to bring interest rates down even further, so... I'll have to see what happens, but... Yeah, this is what we're looking for right here. How many subscribers? I didn't know this. It changes. Specifically, 3,465. It's crazy. I have almost 3,500 subscribers. It's still mind-boggling to me, because even in, like, 1 year, like, it hasn't even been a year yet, and I'm almost at 3,500. ATM, what's going on? Great to see everyone. Thanks for the live stream. You guys are welcome. Kind of doing this improv last minute. Planning on it, but... Ooh, the one person thinks that there's not going to be a rate cut today. That's... See what happens. We got 3 minutes before it gets possibly announced. And then... I don't know... I don't know if I can, like... rebroadcast the speech? Like if I'm gonna get hit with a copyright thing? I know everyone freaks the heck out about that, but like, because I want to just flick it over into a YouTube like live stream and just throw it up there, but I don't know if I'm allowed to. So, because I'd like to play the speech. Maybe we just do it and say whatever. I just don't know if you get in trouble for stuff like that. I know music's an issue, but like, what about like rebroadcasting the live stream, other live stream? New person will be nominated in March or April. Okay. Yeah. I know it was ending soon. I don't remember exactly when. He installed Powell and didn't like that he's smart. Well, he's not cutting at the rate that he wants it. I mean, I remember Trump was talking about wanting negative interest rates. Like, could you imagine you having to pay the bank to keep your money in there? Talk about gold and silver going through the roof. Negative interest rates? Great time to start the channel. Smart move. Well, you know, I wanted to do it years ago when I first got started into stacking back in 2021, but I just didn't do anything until last year. So I guess timing is great. Ride the wave of all the ups that gold and silver has done, but you can rebroadcast it because government news, then maybe. I guess it depends on where the live stream comes from, right? They have to we'll see what happens here in the next. I mean, we got like another 30 minutes, I think. Speech hits, so see what happens here in 40 seconds. See what the numbers come in. Everyone's expecting 3.75. If it goes lower than that, that's see how the metals react here in a second. I don't think they're gonna. I think silver could go down this week even if they cut rates today. I thought I remember, I swear every time the rates get cut, depends if the price is put into it or not, right? I mean, I think because I think the prices have already been built in, so I wouldn't expect them to like go up like crazy, but I also wouldn't expect them to like go down. On the only way, I mean, sometimes one of those weird things where it's like it gets announced and then it goes down. Okay, so there you go. 3.75. Those were the rates. But they said 3.75. So they cut down rates by a quarter basis point. Quarter percent, I should say. So let's see what silver's doing right now. Let's see Bullion's page. Seems like you guys are just saying I gotta make commentary, so that's fine. Well, I don't think there's. It did go up a little bit. I know everyone uses SD bull. Really matters. Fine, we'll look at Kitco. Out of here. Oh, let's look at silver price. View charts. You look at that spike. broadcast live on YouTube. Stupid song. Yes, they did cut rates down, so rates did go down to the levels that people expected. So, but see, this is where anytime they do stuff like that, like with rates, you just get this random ass volatility stuff, like. Song sucks too. Gold is over 4,200 again. Let's see. Go to the charts on gold. Bad block. Gonna do the 1 minute. I could pull up Trading View. It's like look at it by like much lower time frame, but this doesn't surprise me though that it's going down. I think there's gonna people are probably, like I said, the prices have probably already been set this past week with all the anticipation of the rate cuts, and now that the rate cuts were confirmed, everyone's just selling off. I guess. I think people were just waiting to see like if there was any oddities or any like last minute change ups where they just like hike rates or do some crazy stupid thing. And I mean, I don't think anyone expected that, but I think what you're probably going to say, I mean, if we do see rate prices drop, I think it's just we're just taking the profits over the past week. But this volatility stuff is normal anytime something like this gets announced. Yeah, like I don't think we're gonna see much change, quite honest. Live stream about the Fed's rate death. I know this is random, but I'm driving to work and this is the third garbage truck I saw broken down this week getting towed. That's so random that trucks. Broke 60, so the cork has been popped. Holiday for another 12 days. Yeah, I mean, who knows? Who knows what's gonna happen with silver? I mean, I think anytime you get to like a confirm, I mean, usually every like on the last live stream I think we did with the interest rates, anytime that like we knew that there was going to be a confirmed rate drop, the prices would kind of rise pretty rapidly the week before, like just prior to it. And that's happened a few times now. And so like I want to say you can probably almost like just tell from here, like when the rates started, like especially like around July, like go let's just take a look at this. Let's do a little this like since July, I mean really realistically since April, but I would say the run probably started around August, right? That's kind of when it really took off. I mean, they dropped the rates in here. So in July, they dropped the rates in July. They were expecting, or not July. They dropped the rates in September, and they did one in October, and then they just did one right now. And that that past, like, around September time is when all of this stuff, I think all the anticipation of rate cuts for the year, all because of this right here. This is all the priced in stuff. So it would make sense that if January is expecting another rate cut, and if March is expecting another rate cut, where's it going to hold? 350. They're saying it might hold. But if the new guy gets installed, then I expect these to maybe shift more left. So you could see the rise of silver continuing. This is my opinion. Oh, that's all we get. So I don't know. That's just my opinion on this. So I think, when's the next one? The next one's in January. So next month, at the end of January, I would expect some sideways movement for the rest of the month, and then probably another run up as we get closer to the end of January. Because I mean, if they're already well, I mean, I don't know. It depends. It just depends if they I mean, they're gonna probably keep cutting. Who the heck knows? If this keeps going down, I would expect the price of silver to keep, and gold too. I'm not an expert in stuff. I'm just guessing guy here. I know what I'm talking. Invest in new garbage trucks, yes. I think the price of silver is going to stay in the upper 50s for a while. I mean, we've been holding it pretty much, with the exception of the random dip into the 40s again back in October. We've been holding fairly consistently above that 50 mark ever since we broke it. So it's usually a good sign if you can maintain that level. But it does look like it's going back up now. See, there's a lot of green here, so silver might be pushing up now. It all depends on what on the statements of what they say too. I need to move this actually over to this screen, so I apologize. Oh, they do. Hold on, we can actually watch the. It's this one. Cool, we can watch that one. Watch it straight from the. Who do you think you are? I am. Not that guy. This isn't bowling. I don't want to buy more. I know you're not a financial advisor. Do you think you should hold on buying silver for the markets to level out? I mean, I'll tell you what I would do. And I've mentioned this before. Like, even with silver right now at 61, I wouldn't not buy it. But what I'm doing right now, again, guys, like, I use the GSR, right? You guys kind of know this already. Been in my live streams, if you've been on any of the videos, you guys know I use the GSR to essentially determine what it is I'm going to buy. Because I've spent the last... I'm just going to visually show you like my thinking in this, right? So, since I've been buying silver at these levels, above 80, dipped for a little bit. I didn't really buy much silver at this time period. But since it's been above 80, going into the 90s, it dropped again. But since it's been around 80 and above, I've been buying silver for the last 2 years. So I have more silver on hand than I probably need, because now that the GSR is at 69, that means for me that I'm wanting to get more gold on hand. So I would not buy silver. It's still a good thing to buy, but I'm more leaning towards gold. So that's just kind of what I'm doing. I'm picking up more gold because I'm lacking on it. That's based off the GSR. Maybe this will help. Let me I don't really want to. Let me close this real quick. Give me 1 second, guys. I'm gonna show you what I'm talking about here. Maybe this will make sense in the grand scheme of things. Okay. So just the values. Okay. So here's how I do my little chart. Pull this up. We have to do this. There we go. All right, so let me show you how I do it here. So when the GSR is at 69, like it is right now, I want 50% of my stack, or my value of my stack, to be in gold. When it was above, like when it was in the, basically the higher it gets above, like when it's at 80 or above, I go gold. Right here, the math, I did the math weird, so ignore this 103 part, but just imagine this is like the opposite of this, right? The closer that it goes down here, the more I'm going to add my gold. Doesn't mean I'm going to sell my silver to get more gold, unless the GSR goes low enough. It just means I need to buy more. So with the GSR at 69, when I bought my 10th ounce gold eagle like last week, the GSR was at 72. So if I've been buying silver for the last 2 years, I'm going to have to get more gold. And so that's how I do it. I don't stop buying silver because I think it's overpriced, or I don't stop buying silver because it's hitting all-time high. I just stop buying it because the GSR tells me my stack should be this percentage worth of stuff. That's just how I've done it. So to answer your question, I know Baby Shark, I kind of went on a tangent here, but like you said, like if you should hold on buying silver, that's really up to you. This is my method. If I had, like for example, if this GSR was 69 and I bought enough gold that exceeded this 57 level, I would add more gold. Or sorry, I would add more silver. So even with the GSR at 69, if I had a lot of gold in my stack and I was short on silver, I would keep buying silver until I hit this 43%. And that's just how I do it. And I use that number at the time of purchase. So like, let's say I'm not going to buy it till next week. The GSR goes, like right now I could be looking at it this, but by next week the GSR could go up to here. That's going to change my decision in the buying time. So that's just how I do it. Because like I said, last Friday, or like I would just say the last time I bought silver or any precious metal was when it was above 80. It dropped down to 72 in about a week. And the time that I went in to go purchase, I was at 72. Even though I was watching it go from here to here to here to here to here. Hope that makes sense. This is just my method. I don't know if this is right. I don't know if this is what everyone needs to do, but that's just what I would do. I'm not going to wait for something to level out. I'm just going to keep doing what I need to do. That makes sense. Trade in your gold jewelry and then buy silver with it, or keep the gold jewelry. And I mean, I don't have gold jewelry, but if I did have gold jewelry, I mean, it just depends on whether or not you want to keep it. If you don't really care to keep it, then I mean, if you have gold, see what the harm would be in exchanging it for its closest equivalent value. I don't know. I don't. Jewelry and bullion are two totally different things, as you can't really like compare the two. But if you had jewelry, I guess it's just a matter of whether or not you'd want to keep it. And if you don't want to keep it, then just get whatever you want. But then again, that's where I would fall back into my method. Okay, am I lacking on gold or am I lacking on silver? So not buying silver just because I'm broke. How much did you pay for your 1/10 Eagle? Because I picked up one also for 4 days ago. My slabbed MS69 2030. I picked up the 10th ounce. When did I pick it up? I picked it up last Friday? Or was it 2 Fridays ago? How long has it been? I think it was last... Maybe been 2 weeks ago. No. I don't know. I bought it sometime. I think it was last week. I bought it for $4.80. Maybe I can get a gram or something. Great, I don't know. Jobs offer, but yeah. Yeah, I mean, it's just like, you know, jewelry and bullion, they're two different. If you're okay with getting rid of it because you don't want it anymore, then sure, pick it up. I mean, if you're gonna, like, that, my thing is, like, I'm thinking of, if you're gonna sell the jewelry gold, you may as well just pick up bullion gold if that's what you're, again, it's kind of just whatever you're interested in. Yeah, Baby Shark, it sounds like you got a good deal. I mean, I forget when I bought mine. I think I bought stupid thing. Heck. Say stupid as if like I don't like it. I bought it on the 5th. So yeah, for last Friday I bought it on the 5th for $4.80. Let's go back to the Galloway. Lovely camera view. I put my okay. Just don't feel like it's part of the collection being jewelry next to my silver stack, so yeah, it's gotta go. I want a pirate, but not a butt pirate. Don, what's up? Keep stacking and hold it. Yes, keep stacking. Hold it. Try to not sell unless you have something very specific in mind. I think 100-ounce silver is going to happen in 2026 or a pullback. What would you buy today? Well, we kind of just talked about it. If I was buying today, I would buy gold because, again, it's based off of my value of the stack and what I'm at right now. But as this number of the GSR gets closer to 60, I'm more in favor of gold. So I'll tell you, not next week, but maybe right around New Year's Eve, New Year's Day, somewhere in that week, I'm going to go back to my local coin shop and I'm going to buy more gold. Depending on what the GSR is at the time, if it stays where it's at right now in the 70s, I'm going to buy more gold because I need more. I bought so much silver in the last 2 years that to play catch up on gold. So now, do I think silver will go to 100 in 2026? Could. I mean, I don't think everyone was not expecting silver to hit $50 and break the all-time high this year, let alone go to 60. So, I mean, I could expect, I mean, I could reasonably assume by summertime the GSR or the silver price could be 100. I mean, it's very well possible, but again, we never know. So, Friday? Yeah, it was last Friday. I had to double check that. This is great for old stackers. Love to see it. Pockets be hurting from war. It's true. I mean, I have a little recency bias, but I feel like I've been on I feel like since I've started, I've been on the extreme. Because when I started stacking, silver was... What's with silver? I should know this. Silver was like right around here. 20... Low 20s when I started. I mean, it got even into the 18s, into the stuff like that. So I started around when it was like 20 something. So I've seen the extremes now. I've seen like a 3x. It's crazy. Okay, we got to end the poll because confirmed at this point. Yeah, the Fed did lower interest rates by what everyone expected it to be. We're just waiting for the we're gonna kind of watch the press conference and just see what he has to say. The next 20 years, copper will be the. I just don't know. I mean, I talked about that in the last video. I just don't know if copper will ever replace it. I think unless silver becomes really out of reach, that people just start to like, how do I word this right? It's not that copper is a precious metal, and it's not that people are going to view it like that, but I think the price is going to dictate people's decisions to switch their ideas or their thinking that silver is the new gold and copper is the new silver. I don't know if the price is going to force people to do that. But again, if that's the case, why would you want to switch out to copper? Unless it's an affordability issue, then you might want to stick with silver if you know that's what's going to be the case. If silver is going to be the new gold, why are you not loading up on silver right now? You know what I mean? It's just something to think about, because then you could be in the upper echelons of stackers. We're waiting for the speech to see if it's hawkish. Yeah, hawkish or dovish. Essentially, you're just trying to see if the next interest rate cut is going to make people think that there's more rates coming or that there's going to be less rate. It's literally just like day trading speculation going crazy. Mine was 43 when I bought. Later, 30 tomorrow after page. Premium, the GSR is around 74. Yeah, I mean, the problem with that is like with the GSR premiums, if you factor that in, like, yeah, that's not a bad thing to do, but the problem is the premiums change so much on things that it's like, I mean, I think the premium GSR is probably more realistic in terms of, no, it's not. No, never mind. I'm thinking of the sellback. I'm thinking of sellbacks. Like, depending on what you're, I think spot is a better GSR for trade-ins than it would be for purchases. GSR per, like, how do I word this? The GSR that I use referencing spot is a closer GSR when it comes to selling than it would be if you factor in premiums if you're trying to buy. You're going to pay a premium on the silver, but when you go to sell it to the dealer, they're going to give you less, and it's always going to be closest or lower than spot. So if you're going to use a GSR to reference how much you can trade in, I think using the spot GSR is going to be a bit more realistic. ATH gold, so the gold silver ratio is about 60 to 1. Okay. The hell in here can load up on gold? When people bought silver 20 years ago, only $5 or $6 an ounce. Same thing with copper, and it's makes your worth. Yeah, it's just to me, I just made a video on this, but for me, I personally wouldn't go for copper. But again, other people want to go for copper because they see value in it. That's totally fine. I'm telling you what I would do. I would not go for copper because, one, it's not a precious metal. Two, I guess alongside with number one, it's a base metal. Number two, it's more industrial than anything along with that. So, and the premiums are extremely high. People who complain about a $2 premium on silver are going to be like losing their minds when it comes to copper when you find out what the real spot price was. And then it's just, again, like silver compared to gold, silver is bulky. See how much this is versus, I think this is worth 7 ounces. So like if you add, let's like, just in terms of weight and space, like what's this, 5, 6, 7? So just the rounds here that you see, government things, like this is equivalent to that. So space is going to be an issue for silver stackers. But now if you're switching into copper, like, God, man, you're going to make it work. It's like the same thing, but just with copper. Change the metals around. But again, if you want to do that, go ahead. Like, I personally don't. I'm going to keep going for gold and silver. I just don't know, like, in a situation like when it comes to hyperinflation or in a situation of a barter scenario, I don't know if copper is going to give you the same benefits that gold and silver will. Makes sense. What's gold going to be? Unobtainium. all that copper. Yeah, exactly. I mean, imagine if this is silver and this is your copper. Like, you think silver's bad? Wait till you get copper. We bought a few 5-ounce copper rounds because they look nice. They certainly take a lot of room. Yeah, I mean that's another thing too. If you like it for the visual aesthetics and designing, that's totally fine too. I actually have no problem with that. But stacking it because you think it's going to behave like gold and silver will, I don't agree with it, and it's just not something I'm looking. We got a few more minutes and then the press conference should start, so we'll I think once I see the video start going and everything like that, we'll switch it over. It would be crazy if the US mints released a Copper Eagle round. That would be... Could you imagine? Well, that would just be... I don't know, man. I mean... I feel like with all of the random privies that they're starting to do now, I would not be surprised if they start doing a copper round or they start doing an aluminum round. They do the base metal series, right? They start doing the what other metal can we come up with? Like the zinc round, the nickel round. They're just gonna start coming up with all these stupid things, and they're gonna start slapping privies on them. It's just like, ugh. A Copper Eagle will cost $10. I'm sticking to this though. I'm gonna stick to gold. Because to me, this is my end game right here. This stuff right here. This is what I'm gonna retire with. This is gonna be my savings / like retirement fund. This stuff is just gonna be for, I guess I saw someone said a really good thing. They said this is your savings account, this stuff is your checking account. That's how I viewed it, and ever since then I was like, oh, this makes sense, this is cool, I like that. So Investment needs to release a 5-ounce American Silver Eagle with the Maple. I feel like the US Mint could do so much more. They just choose not to. Like, what they should start doing, if they really want to get sales from people, they should restart the fractional buffalo again. Like, if they do the fractional buffaloes, that would get it to go. And I think we actually have some video feed here, so let's cut off the music for a second. Let's go bring this up to here. Go live. Get rid of the over. Actually, I'll keep the overlay just because try to like hide any pop up. If this is loud enough. Here we go. What happens?
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand.
I feel like this is all a lie
In
when they say
contrast,
stuff like this.
activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter.
I don't know about that.
Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal.
Okay, I got to talk about that
Very
afterwards.
little data on inflation have been released since our
Inflation
meeting
stuff.
in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%.
That part right there.
These readings
The
are higher
exclusions.
than earlier in the
I don't know if
year
you guys
as
know about
inflation
that, so we're
for
gonna
goods
talk
has
about it.
picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals.
Basically, we're
A reasonable
screwed.
base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance
Still
since
talking
September
about the tariffs.
bring it within a range of plausible estimates of neutral and leave us well-positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time.
This stuff I don't really
Such
understand.
increases in our securities
so you guys are
holdings
aware.
ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup pickup in growth in many of those now, too. So it's partly that consumer spending has held up. It's been resilient. And to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the 2 official dissents against the cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our 2 goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the 2 parts of the mandate, and when you do, this is what you see. And I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures.
That's one thing I want to cover later.
Inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did 2 discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down and tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
Just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in reserves, in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end.
So he just said, like, if we have a problem, it's just screw it. Just stand there and just watch it happen. That's what he just kind of said.
We haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. You know, we haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis
waiting for
points
that
higher
question.
than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got it when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, they're at very comfortable levels. They're at levels consistent. Once you get out past the very short term now, break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
There you go.
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years
while we print the hell out of everything.
Compensation is higher. It's positive, significantly positive. So nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages, so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year, and inflation is around 3%. So is the message that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2%, because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated,
Haven't they been saying that for like 5
difficult
years?
situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But, you know, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and you know, we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. You know, we didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both. And I think we're doing the best we can for people. They also care about their jobs. They do care about affordability. And the best thing we can do there is both to support economic activity, but also, you know, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and, you know, that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, you know, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, you know, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, you know, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, you know, the question is, what are we going to see here? And we don't know, but it's, you know, it may be that in past technology, really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. You know, it's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Enda.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
On the policy what?
On the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
You know, it's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
Yeah, that'll be huge.
It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
That's like a ticking time bomb waiting to happen.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's...
We're going to talk about job creations and jobs watch.
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. And what we saw,
told you,
for example, what we saw at the end of the the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Damn.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low low-rate mortgages from the pandemic period, and they kept refinancing and caught the really low, so it's made it expensive for them to move. And, you know, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and you know, really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, you know, a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, you know, we see higher inflation than, as I mentioned, most of the inflation over target is from goods. And we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? You know, that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that you know, the labor market gets tight or the economy gets tight, and you see, you know, just traditional inflation. I don't see that as particularly likely. But so I think, you know, again, you know, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had, you know, 5-6 years of 2% productivity growth. This is higher. You know, this is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having, you know, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. You know, the pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, you know, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control. coming back down to 2%.
AKA, I don't want to screw it up.
That's what
I don't want to be known for screwing it up.
All of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman, Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, sort of every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
All right, there we go. We're done with this. All right, so let's go. Let's see, silver and gold. Let's see what's been going on. I've been kind of watching it a little bit now that this is done. Silver is just absolutely popping off. That entire speech, look what silver did. I mean, this isn't a 1 minute time frame, so it's not that big of a jump when you look at it, because I mean it's like 60.28. Well, the very, very low right when they announced the rates was right at 60, and it went up to, I guess, $2 move is pretty huge in a span of like an hour. So but this is all it's done in the last, like, the entire speech, because he started talking right here, and the speech just like went up and up and up, which is crazy. So let's see what gold did. Gold, I think, did the exact same thing, more or less. Let's see, as low as 41.81 and kind of hit about 40. So about $100 spread. Gold, almost. But oh man, yeah. So there's a couple things I wanted to point out that he was talking about that I was going to bring up in here. So some of the things that you guys were chatting about too, and what he was really talking about was, you noticed any questions that he was asking about, like, why did you guys, like, if you're going to run into any issues, what's going to be the thing? And he always talked about, well, if there's any issues, we just got to make sure that the labor economy is good. He's like, oh, well, everyone else is feeling the pinch in inflation. Like, all the people going through their day-to-day life are experiencing higher and higher prices each year. You guys are trying to get to 2%. You've been at 3%, but everybody's still, pinching their pockets more and more each time. His response to every single question was along the lines of, well, we just got to make sure the labor economy is good. We got to make sure the jobs are there. We got to make sure that people are still working and being able to afford things. But they don't, like, the thing with this, and this is like where, for anyone who's unaware, like, I know we have a lot of people who joined in when that speech started, so we have like 140 people here in the live stream. But for those, like, obviously, if you're here and you know what this channel is about, it's about gold and silver stacking, things like that. When they tell you these things about how we just got to make the economy good, we just got to make the jobs good, like, that doesn't mean a damn thing in my mind, because yes, it's important, but what they're not telling you are the changes in the inflation that we actually see. So let me pull this up real quick. So in case you guys weren't aware, they made changes to the CPI index. You hear about the CPI numbers. Inflation rate is 3%, 4%, blah, 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 right? So they made changes a couple times back then. In the 70s, I think it was, which one is it? I think it's right here. I think it's in this one. It was like in the 70s or 80s, somewhere in this range. They did a thing where, oh, right here, sorry, the 87 revision. In 1987, they changed the revisions on how they calculate inflation. And one of the big things that they did was they redesigned the CPI housing survey. So the old way that it used to work was when they calculated inflation rates, they would get the home prices, the mortgage interest, property taxes, insurance, all the things that it takes to own a home, right? Well, that got scratched back then. And now the way that they do it is based off of renters. It's like, what is it called? Like equivalent rent or something like that. Owner's equivalent rent. Essentially, it's BS for how much would you charge someone to pay rent. Well, when home prices have gone up as much as they have, inflation would be so much higher if they calculated it the old way. If you're counting home prices. I mean, we've seen what they've done in just 10 years, let alone go back to the 80s. And then they did another change where they started to like refocus the thing called the core CPI, which is what we kind of know now. And and all their changes are here on the BLS. You can look at all this here. You can see all the changes that they made on here. This is not something I'm just making up or just like, this is all right here. So they changed things and they started making the core CPI the new thing, which is where they would just start to like, they would start to exclude like certain things like food and energy, because the CPI typically includes that. But then they start focusing on the core CPI, which excludes food and energy. Well, we know food prices have gone up. We know energy costs have gone up. So they're excluding these things. And what happens is they start to just like, they make inflation look worse than it is. And here's what inflation looks like right now as for how they're reporting this stuff and how we're hearing it on the news every single day. It's stuff like this, right? These 1%, the 2%, blah, 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 you know, kind of went up. It went pretty high in 22. We all know that. And we're sitting at around 3%, 2%, somewhere around 3 right now. Well, the problem is when you silently change the way that the inflation information is collected, what you're going to get is this. And this is what inflation rate really is like. And I think anyone who owns, you know, who rents or has a job and they're struggling, like this, you're going to resonate with this, because this one here, the shadow government stats, like this is the one that is legitimately real. And so like you have the 1990s one and the 1980s based one. If you look at the inflation rate, if we're at right now 3%, essentially just like triple it. Just triple it, because that's really what you're at right now. Because if you look at the CPI right here, this red line on this chart, this is showing you what, let me zoom in on it. So on this chart right here is what they're saying inflation rate is. This blue line is what it actually is. So if anything, it's almost 4x'd in some ways, because this is probably about 12% right here. I think anyone would agree that 12% inflation is legitimate. I think that's correct. I think we're really seeing much higher levels with this. And that's because, again, when you exclude the insanity of home prices, you exclude food and energy, and you change the way things are getting done. They were even talking about doing like a super core CPI. I don't know, it was a couple of years ago they were talking about that, where they're excluding like even more stuff. But when you do that and then you print all the money and then you pretty much like discredit everybody's ability to struggle, like everybody's like inability to afford things. And you just say, well, people just need to get better jobs. We just got to make sure people don't lose their jobs. It's like, it doesn't matter. And so, like, when they're telling you that CPI is 3%, or when inflation is 3%, just quadruple it, because that's really what it is right now. And so they're just lying to you when they say these things, and they're just going to keep printing money, and all they're going to do is just tell you, well, we just got to make the jobs better, and they're going to keep lowering rates. They're just going to keep printing more money. That's why you need to get gold and silver, because you need to be your own bank when this crap gets out of control and they start going insane and start printing exuberant amount of money. And then they're just going to continue to say the same thing. Well, you know, what they're going to start doing is either they're going to say, well, 3% is the new goal, or 4% is the new goal, and we'll modify the inflation data a little bit more. So I mean, it's ridiculous what they're doing with this. So this is why you need to own precious metals, not just because it's a hobby of ours and we like it so much. I mean, is this another all-time high right now? Like, yeah, I think this is an all-time high again right now. Like, this is why you need this stuff. Because you need to be your own bank, and you gotta own hard assets. Trying to keep a job so you can work for a dying fiat currency system is a joke. That doesn't work anymore. Doesn't work anymore. So this is why you need to own this stuff. So just my opinion on that. But what do you guys think about all of this stuff? The live stream, or not the live stream, but the meeting, and how they're lying to you about inflation and stuff like that. Like, I mean, it's clearly a joke. Put everything away for a bit. I'm gonna reset up here. Let's switch back over to the table. Get back out on the table again. And all right, so stuff. Tube. All right. I mean, yeah, because that's the thing. When the money printing goes crazy, you're gonna want. But the problem with owning a 10th ounce gold, you're gonna lose it every time. Like, where did I know I had it right here? Unless you're making 150K, you're struggling. Well, that's the thing. Like, they're gonna try to tell you, it's like, oh, you just gotta make sure you have a good job, and it doesn't work anymore. It doesn't work anymore. New generation of kids don't like to work, so how will this work out for the economy and numbers? I mean, I don't even know if it's so much as like kids don't want to work today. I don't think that's really there anymore. I think it was, but I don't think it's really that much there anymore. I think what they're seeing is they're so disincentivized to work, because if any jobs that are available pay so low that they can't even like afford anything, so they're just like, well, screw it. Why work? So it's like, that's kind of where I think that's where a lot of their heads are at right now. Because I work with a lot of kids who are freshly, out of high school and into college, and so that age range, I work with a lot of them, and they're basically just like, dude, it's like, it's not even like worth like doing things half the time because nothing pays well, and so it's like, when everything costs a foot and a leg, it's just like, why? I mean, I don't blame them. Why bother working? Like, that's why I said, like, the younger generation just has it like harder, and it's just gonna get worse and worse and worse. And my parents and my grandparents don't have any idea like how bad it is, even just for myself. Like, I'm fairly well off, but that's also good. I mean, I also work a little bit harder and insane than probably most people do, but again, it's all about where your mindset is and actually what you can even do in the first place. So We're gonna hit 62 today. We might. We might. We could hit 62. Here you get a capsule. I want to get a call it. I want to get a you get a tube. Get a tube. You know, economy was tough. Be tough since stackers are less than 1% of Americans. Well, I think even I really truly believe that. I don't know when this will happen, but you want to separate yourself from, I don't want to say separate, but if you want to shield yourself, maybe is a better word, from the potential crap that could happen. It's this stuff right here. This is what's going to save you. I mean, even with these prices going as where they are, like, I mean, you have to. Like, it doesn't make sense to save money and work for money that's just going to go down in value every single month. It just doesn't make sense. But people still think that the old method of going to school, getting a 401k, going to get a job, and do like those things don't work anymore. You have to do, like, it's outdated crap. And people who grew up in that era are going to think that I'm wrong, but like that's because they've had their whole life in that environment, so they think it's right. But it doesn't work like that anymore. Like this stuff is what's going to be like important in the future. I don't know when or how far in the future, but this stuff will be the things to go after. People are rushing to sell. It's a big mistake. True stackers know not to sell. Yeah, I mean, the only thing I would sell, I was thinking about it recently because before I used to say I was a never seller and I would always never sell unless I absolutely had to. But I would sell my silver if I was going to get a different asset. So if I was going to get gold, or if I was going to get real estate, or if I was going to get something else, I would be okay selling this stuff. I would be okay selling this stuff to get another asset, but I wouldn't sell it for fiat because I need to pay for something. Didn't do my job to plan for it. Sense. U.S. just seized an oil of Venezuela. See anything about that? At least not yet. Silver is now worth a barrel of oil. Is it really? It's insane. Nephews are in their 20s and they're making $65,000 a year. Problem is a studio apartment is $2,500. They'll live at home. They can't afford a home. Exactly, that's the thing. It's just impossible for kids nowadays, especially like I feel like my generation, because I'm 35 years old. Like where I'm at is like I'm like right in the middle of being able to either get out just at the nick of time, or I'm gonna get caught in the vortex of crap and get stuck and never be able to afford anything. Right on that edge. Really what I feel like I'm at. But again, it does depend a lot on what you want to do in your efforts and the hard work that you put in. So I'm not trying to make an excuse for it, but we have to live in a reality that most people have that situation. We did hit 62 on ATMEX. I'm sure all the more expensive online dealers are probably already at 62. Let's see, ATMEX is at 61.98. Essentially at 62. JM Bullion's at 62.02. Yeah, 62 on some of the online dealers. Lots of jobs won't even give you a chance to do anything ever working for them. I really do believe you have to kind of, in some ways, I'm not sure how much of an impact it goes because, they were talking a lot about it in the press conference. How they're saying like AI is gonna take over the jobs. I really think in some way, if that does happen and jobs become less and less abundant, you as an individual have to say, be more self-productive or producing in some capacity. Like you either have to, I really think in some degree in the future, you're going to have to either own a company that provides a service, or you have to have real assets. But even if you have a company that provides a service, that service won't be to people per se, but it'll be to other companies, I guess, if that makes, like AI, or maybe there'll be some people, of course, but I really think like you have to develop a skill set for yourself that can be deemed necessary by society, like, because you can't work for somebody. I think you almost have to like do it yourself. I really do think in some way like you have to. These are cutting those with degrees because they already tested the waters with non-citizens. Time. Silver. Sad. We almost stack. A lot of us were canceled over the 2020 scam. That's, yeah. I knew when all those jobs came back that like even I'm surprised even commercial real estate has lasted as long as it have. I thought that was gonna go under a lot quicker than it. I thought it was gonna be like, I thought it wouldn't have rebounded as much as it did. I thought it was gonna be like you're not gonna find anything, but in a way it kind of did. But I thought it was gonna be completely like obsolete. I thought that once we went into like the work from home thing, I thought that was gonna be like the new thing. You know what I mean? Those post future spot prices, not the spot prices. So online well, yeah, that's true. Yeah, I mean, well, they also get higher any. Yeah, I'm looking at it right now. SD Bullion's at 61.95. Hitco, it's for them because I know you guys like that, is at 61.77 for silver, and gold is at 42.32. So that definitely gone up today. That's music back on. Got. I don't even know how long I'm gonna stream for today. We kind of just started with it and just kind of went from there. I have no plans for the day, so we can do this as long as we want to. Matter. All right, let's go back to this, I guess. Oh. Alright, I'm adjusting the volume. There we go. Let's see what we got here. In Manhattan, more and more restaurants and retailers are closing for good. Well, that's also New York. No offense, that place is freaking designed to be a master failure right now. Are you giving away something today? Not right now. We obviously will be giving away these kookaburras next week. So that'll be for sure the giveaway. At least by next week. So I don't know what day yet. I have to double check, but these kookaburras are going to be what we're giving away. Belly up in 2026. Sets are key. I truly believe this stuff is key. Like I'm not kidding. When I offloaded all my 401k stuff, I offloaded all of my stock portfolio. I am completely in this in real estate because I just see the writing on the wall as to what's going to happen. So getting this stuff is going to be, this is what's going to save you in the future. It might not do anything for you now, but in 20 years, if you're still around, or maybe your children will have it, like whoever, you know, depending on your age, This stuff will absolutely save your butts in the future. But all the copper coming out? Oh, you mean the discontinuation of the penny, Chucky? I don't know if that's what you're asking about. Didn't they? I thought I saw somewhere that they're discontinuing the nickel for like 10 years. I might be wrong. Is the music too loud? I can't tell. I think it's okay. Everyone talking about 90%, but why don't I hear anybody talking about buying sterling? I don't think, I mean, you don't really stack sterling like silver. I don't know. I think it's just like I don't know. I think it's just when it comes to, I mean, it's like, it's still, I don't know. I just think it's just, it's like jewelry. It's like, it's its own category, and not everyone, like sterling silverware stuff is like outdated nowadays. Like, no one really cares about it. They don't care about having nice, again, I think what it does is it ties into having nice things. People don't even want nice things now. They just want a damn fork that works, that doesn't break on them. So they're just going to take whatever fork they can get. Having the nice fancy stuff, it was like, I don't want to say like a softened luxury back then, but nowadays it's like, it's impossible. It's like, why am I even going to bother? It's like, people just want to sell it because it's like, times are tough. So they're just like, I want this. But the 90% silver stuff is like, in a different category than sterling, of course, but it's more of a stacking asset than anything. Mint is auctioning off gold pennies. A lot of 1 ounce copper rounds on the market. Well, I think that's the other thing too, Chucky. I think I made a video on this too. Like, I still think majority of the people are not going to switch to this yet, but people are, I think the conversations about switching from silver to copper is growing more and more. I think it's starting to gain some momentum. And so, I think people are going to, I really do think people are going to start switching over to it. But again, doesn't mean I'm going to. Well, a penny for your thoughts, like a dime for them. True. 8 cents, so it's preferred, but dimes. I thought dimes were still like profitable. I don't. Not like it wasn't more expensive. I don't know. Okay, so let me take a look real quick. SD bullion's now at 62. That's insane. It goes at 61.86. That's right, Mark. You know your silver's is ripping when we're here talking about copper, right? Let's just be a copper stacker now. And then once copper takes off, we got to switch to aluminum. The funny thing is, like, I don't think copper... I don't think the prices have really moved much on... I always see them at like $1.99 for an ounce. Baby Shark says, going into work, hopefully I can get back soon. Alright, man. I don't know how much longer we're going to stream for anyway. I just wanted to kind of cover all that stuff. My phone's about to die here, so all this stuff will be cut off at some point. We might get close to ending it, but I did try a new... I haven't done it yet, but there's a new feature. I don't know if it's new, but YouTube has it, where we can kind of like raid other channels. But I don't think anyone's on right now, so we can't really like go in and do a raid, because it'd be cool to bring like 100 people into someone's live stream, but everyone else is all like yes, independent free thinkers YouTube that don't really align with stacking, so I don't want to get you guys out into different areas. But H says, do you think silver premiums will ever go up? I've been buying pretty close to spot. Actually, now that you mentioned that, let me actually pull up my... I have a thing on my Google Sheets that I made. You guys can obviously access too. Let me actually go to my personal one. Switch it over here in a second. So I've tracked the premiums over, so I updated it, so the premiums honestly haven't been too bad. The premiums have not been too bad. They've been holding flat because I track them every day. Let me just switch it over. So I have this thing that tracks your stuff. So like I have a sheet that like tracks the live bot prices, any deals that are going on right now, anything that I've ever purchased gets tracked here, and the portfolio performance and how much is done and blah 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 blah. But on the premiums, I had a whole list of like 3 months data. I might have to switch it to like a 3 month. I might switch it to like a 90-day. But I've been tracking the premiums, and you can choose, like, for example, the Eagle, the Buffalo, the Maple. Like, they've kind of come down a little bit, like, because before they were getting close to like $7-8, but they've been kind of flat lately. So they've come back down a lot. Same thing with like the gold, you can see all those, but so it's gone up a little bit, but not really in the last like past week. So premiums have been flat. But like I remember the Eagle was like close to $8-9 at one point, so it's come down a little bit. So premiums have actually come down, believe it or not. But premiums fluctuating, and it also depends on where you get them from. $63 gold, 32. So it looks like we're holding here for a bit. Now that the speech is done, we're kind of flatlining. Steve says, well, the 2021-22 American Eagles had a premium of 15 and 20. Dude, yeah, I know. That's when I started buying. I started stacking these guys when the premium was that high, because I didn't know what I was doing. I just started stacking the first time. So I was buying these at those premium levels because I didn't know any better. I didn't know what I was doing. So, but yeah, so we have, that was my first mistake when it came to premiums. But since then, I haven't done that. And I've been buying a lot of generics, a lot of Eagles for very cheap. But the way things are going right now, I'm switching to these guys. Just because everyone's looking at silver right now and gold's just kind of getting ignored a little bit. So I'm going to pick up more on this stuff. So again, I'm going to hope to pick up quarter ounce going into the end of the month. So we should be able to add a little more gold to the stack, which is always W. Musgrove says, I bought 1 ounce coins at my LCS and it was spot +4. Was it the Eagles? And you made profit? Yeah, Steve, I've made profit on every single purchase so far, with the exception of the privies of these things, right? The military privies. Obviously, those are overpriced, but I mean, we're getting close to that. But with the exception of this gold, everything that you see here has made profit. I have like literally doubled my money on almost everything. Except for the kookaburras. Yeah, well, I guess even the kookaburras, but this is a giveaway item. We're not, we don't count that. Got his first 1/10 ounce when it was like 180. Checking. Don't you miss those old prices? Don't you miss the prices from like 3 months ago already? Like, that's crazy to think. Like, people used to say like, oh, I remember back like 5-10 years ago when it was this, and now it's like, remember when it was 3 months ago? This is the stuff you want, guys. Right here. Copper. I guess you can do that. Stick with these. See. Oh, I guess. Yeah, I guess they did seize an oil tanker off the Venezuelan coast. I do see things about that now. Associated Press is talking about it. If there's anything that I see. No one's really. I don't really see anybody. Call it live streaming anything about precious metals, so fortunately. But otherwise, I think we're gonna call it here, guys. It's about 3 o'clock in the afternoon. I think we're good. We got a lot of the stuff done today. Silver is ripping, doing really well. Obviously, they think that just keeping jobs is what's going to keep the prices down, but that's not what's going to happen. So you may as well keep your money in this stuff. So, but otherwise, I think that's going to do it for today, guys. I don't think I got much else to talk about. They're at it. The Fed stuff is completely out of touch, and we're aware of that. Silver is hitting new all-time highs again today, which is great. Silver holder, and you've been for a while. But otherwise, I think that's going to do it, guys. I would raid somebody, but I don't see anybody who I personally want to raid. I don't see anything on now. Wise, I think it's going to do it. So next week we're going to do the live stream giveaway for these kookaburras. We're going to give away 3 of these. And yeah, that's what we're going to do next week. This was kind of an improv stream today, but we're going to give away these 3 next week. I'll let you guys know when that's going to happen, depending on my work schedule. That looks like yet. But otherwise, that's going to do it for today, guys. Thank you for stopping by, hanging out with us, watching all the things that were going on today. And about it. Keep stacking silver, guys. Keep stacking gold. If you're thinking about getting into copper, then I guess do that too, but that's not for me. But otherwise, that's enough rambling today, guys. Have a great night. Have a great rest of your week. I'll see you all next week. Do the giveaway. Bye-bye, guys.